The last chart that we're going to look at this evening is the COMPQ, which is the composite of the Nasdaq. And must remind everybody once again, this is for educational purposes only, not to be construed as a recommendation to buy or sell anything. So we're looking at a cup and handle once again. Very familiar. It was present in the Dow Jones Industrial Average as well as the SPX. I had mentioned last week that it is a bullish continuation pattern, so what it did is not surprising this week, but the fashion in which what it did was quite surprising. It looks like the investment community was quite excited about getting involved with the Nasdaq. It gapped up, big trading day, gapped up again, went sideways a bit and gathered itself and then gapped once again. Now what we find is a double top. Now a double top is a fairly significant chart pattern. The psychology behind it is the folks that were late to the party up here and getting involved with this, feeling that this up move was going to continue, yet experiencing this down move, it can be quite disconcerting. So the thought in their mind most probably is that we're going to wait until it comes back up to where I bought it, and then we're going to get out of this stock because this was not very much fun going through this ride to the downside. So that's why when you experience a double top, selling pressure many times comes into being, because these folks that came in late are saying, I'm gone, I'm out of here, I don't want to experience that again. So what I'm thinking is going to happen is we're going to move sideways or sideways to down. The likely area of retracement would be back to the 50 simple moving average, which is the blue line that we find right here, right at the initial flag pattern of the backside of the cup and handle. My bias last week was I felt that it was going to go down. Obviously, I wasn't spot on with that. So good traders follow the market, so I'm not going to get upset because it didn't go down. I'm just going to make money by following the market. It's important that we have targets, though, and so the target was to the upside if it did break out. The target was to the downside down here around 2100 had it broken that way. So again, the target, if it comes back down, is the 50. Now, if it does break up above the double top here, it could run, and it could run in a robust manner. I would like to see increased volume if that happens, though, because that would then really seal the deal in terms of a bullish run. The stochastics is in the overbought area, and the MACD is showing me nothing but bullish signals. The volume, although it's not puny, is not really remarkable. You would have expected more of a bullish move and a lot more participation in volume on this kind of a move up. So my thesis this week is, because of the double top, that it is going to go sideways or sideways to down and come back and retest right here at about the 50. It might not happen right away. It might languish a bit and come back around. But I do think it's going to stall at this area at least. Okay, with that, I'd like to remind everybody, stay nimble in the market, follow the market. It's important to have targets like I always point out to you every week, but you know, the market is going to do what it wants to do. And if you're going to be successful in trading the markets, you need to realize that those that are successful follow the market. But then have a target where it's going to go. Look at the candles as they begin to approach that, those areas of support and resistance, and it will give you an indication whether it's beginning to slow down and respect those areas of support and resistance. So have a good trading week ahead and take care.